As long as derivatives exist, right? So silver futures where they can create as much silver as possible. But then again, remember, we're coming to conclusion, and I do consider what happened in 1980 at that $50 mark. I consider this a massive double cup because it did come up to breach that level. And so when it goes above that 50, would three or even four digits in the silver nominal price, the price that we see, would that be outrageous? No, it's worth at a minimum $1,300 an ounce. And that's just based on the 20th to one that historically we were. These were both, well, it's peace dollar. Okay. These are both a dollar, little $1 gold coin and a silver dollar. So that's a 20 to 1 ratio right there. So according to my calculations, you're looking at the true fundamental value of an ounce of gold at somewhere between $33,000 and $40,000 an ounce. So at 3,400, spot gold is a ridiculous bargain. But that also then means that silver's fundamental value at this moment is somewhere between 1,300 and 2,000. And remember, the more of this that they do, the higher those numbers go, because this is fiat money, government debt-based money. But gold and silver are sound money. Sound money is money that governments and central banks cannot inflate away. They can manipulate what you see through the use of garbage derivatives, but they cannot inflate it away. The point is they are both money. They're just the opposite sides of that money coin. And as this loses more and more and more of its purchasing power value, these go up in nominal terms. But what they really do is they create a bridge, because when one currency goes away, another one comes in. It's just that you need something and I need something. We need something that will hold its purchasing power intact to get us from one system into the next system. And dare I say it, even have the ability to take advantage of the opportunities that will present as these extremely severely overvalued fiat money assets. And real estate is actually not pure fiat money because it is a tangible as well, but it's severely overvalued. That's going to flip flop. So if you can hold your purchasing power intact, you're going to be able to have that wealth transfer your way. Well, I personally do not see it. I see it as inevitable, because what gold really does is it regains confidence. I mean, they want us to think that gold is an old relic, except wedding rings are generally in gold. Good as gold. It's in our vernacular. It's in our DNA, and it's used to regain public confidence after that massive failure, which I believe we are like this close to experiencing, and the hyperinflation. But make no mistake, every single country has a gold revaluation account. They're not going to do it at these levels because it does not reflect all the paper money that's been issued. So what I think we will see, and it's just a repetition of history, because this has happened over 4,800 times. I don't think this time is any different. And that's really what the point is. But they have to, you have to kind of back up to move forward. If they did it now at the artificial level that the spot markets are, then it wouldn't have as great an impact if they wait until they finish blowing up the currency in a bout of massive hyperinflation. And what they do then is, of course, they lop off zeros so people think, well, they've got this under control. So you've got a loaf of bread. And I know this sounds outrageous, but it's not outrageous. It is just a repetition of history, where a loaf of bread might go for, as it enters hyperinflation, a loaf of bread might go for $80,000 a loaf, right? But then what happens? They lop off 3 zeros or 4 zeros as they do that overnight revaluation. And so it goes from $80,000 a loaf to $8 a loaf. But so do your savings, and so to anything that you've accumulated in fiat. And frankly, so will the nominal price of gold. First, it'll go up massively, right, in the hyperinflation. But the difference between, say, your stocks and everything else, that drops dramatically immediately upon the revaluation. Whereas gold, it's on average, so I can't guarantee this, but on average will stay up at that level for about 9 months before it too gets revalued, but then it instantly begins to climb again in terms of that new currency. So that is what I anticipate seeing. I don't anticipate seeing it before we do hyperinflation, because there is not yet the need to regain that public confidence. But I watch that like a hawk, because that, my friend, is the only thing that's keeping all of this stuff together. Well, the Genius Act is the first legal foundation for cryptocurrencies and stable coins in particular. I personally believe, I mean, there are many reasons why this administration made the choice to legalize that. I mean, there's definitely stakes in the game, but it had to happen anyway, because we're moving into a new digital system. And what nobody really realizes yet, and I'm so glad I'm old because I've lived through this and I know how to recognize it, and I've studied it since 1987. When President Trump signed the Genius Act, he changed the global monetary system. And I believe that, and you know, I'll put my technical neck on the line with this. I'm not even giving myself any wiggle room in here. Although, of course, I will say I could be wrong, but from the tip of my head to the bottom of my feet and every single area in between, I believe that this will now usher in the hyperinflation to burn off the debt that's being created. But make no mistake at all, when he signed that, the monetary system changed, period. Now, the fact that most people don't know about it yet is not relevant, but I was there in 1965. I was about 11 years old at that point, so I didn't really understand what happened, but I remember that period of time. And I was there in 1971 when we went off the gold standard. And I remember I was about 17 years old. So I definitely remembered all of the chaos and everything around that currency regime shift. And there is not one doubt in my mind that we just experienced that a couple of weeks ago, or 3 weeks ago, whenever he did that, the beginning of this month. And that was about, look, this is the way I view President Trump. He is a change agent. This change had to happen because we have used up all the purchasing power value in this stuff. And once you do that, there is no place to inflate away. You must attack principle. But since at the same time, what's been happening is a shift in the allegiances on a global basis. So the rest of the world has, as we know, they've been turning away from the U.S. Treasury market, which is the foundation of the global financial system. Well, when one market goes away, they got to find a new one. And so by legalizing the Genius Act and requiring all of the stable coins, at least that are issued by this country, to be dollar-backed 1-to-1, what he's done is created a new artificial market, just like Kissinger did back in the 80s, 70s, and 80s with the petrodollar. So that's what he's attempting to do. And right now, according to a recent article Think about this because it's crazy, right? But in a recent article by the St. Louis Federal Reserve, they talked about the impact of the stablecoins. And right now, there's about 125 billion stablecoins in this market. And most of them, it could be, I don't have this number in front of me, but somewhere between, I think it's even 99% of currently all stable coins that are issued are dollar based. And they've been adopted majorly in third world countries, particularly in Africa, where their currencies are experiencing very, very high inflation. So what he's done is he's made sure that every new stable coin that's going to be issued by any corporations in the US, because that's who issues them. We don't want CBDCs here. Okay, well, I'm pretty sure we don't want stable coins either. But the CBDCs have a central location and there would just be one per country. The stable coins are issued by any corporation. So we'll have Amazon stable coins and Walmart stable coins and Kmart stable coins and, JC Penney, as well as JP Morgan, as well as Hong Kong stable coins, the yuan stable coins. So it is an extraordinarily fragmented market. But they are thinking that within the next 2.5 years, by 2028, they will go from about 125 billion stable coins to $2 trillion in stable coins. And they are busy creating the legal framework of safe harbors and exemptions and all of these things. So if I take you back to 2008 and the great financial crisis, where what these bankers did was disgusting and vile and cruel and destroyed so many people's lives, nobody went to jail. And they didn't go to jail because legally they didn't do anything wrong. Ethically, it was horrible, but legally it wasn't. And they're setting that same kind of system up now and encouraging all of this experimentation. And guess who's the guinea pigs? And guess who's just about the right size to fail? But that's also why I say that this is what's ushering in the hyperinflation. Because the easier and cheaper it is to create new money and spend new money, the more will be created, the more will be spent. And really, how do you even value any of these cryptocurrencies? I mean, if they do a physical representation, because that's all this is, these aren't Bitcoin or Ethereum or XRP. They are the physical representation. And I find it so interesting that they make them look like 1 ounce gold coins, 100%. So, but now think about these numbers, right? If you've got 2 trillion coming in through stablecoin issuance and the Fed doing an about face onto their balance sheet of 2 trillion, that pretty much covers all that new debt that comes out in that big, beautiful bill, isn't it? Doesn't it? I mean, it's just to keep the game going, and they can, as long as the public maintains confidence in the system. Because bank to bank confidence, that ended in 2008, central bank to central bank confidence. And if you want me to go into any of these in more detail, but that ended in 2015. Market to central bank, remember that they would tell the banks what they're going to do, forward guidance. We're going to tell you what we're going to do so you can get into position. But that ended in 22. So there's only one layer of confidence that's left in this system, and that's the public still hoping beyond hope that this can regain some of its value. That's hopium. That is not a good plan. And it doesn't really work either because the cards are stacked against you.
Gold and silver have once again captured the spotlight as America teeters on the edge of unprecedented financial and political instability. With Donald Trump's recent surge in polling numbers despite multiple legal challenges and the U.S. economy walking a tightrope of inflation, rate uncertainty, and record-breaking debt levels, it has become abundantly clear that the fiat system, rooted in endless money printing and blind trust, is broken. Gold and silver are not just alternative investments anymore. They are lifeboats in a storm of economic and institutional collapse. Every fiat currency in history has eventually failed. The US dollar, once backed by gold, now floats on the whims of policymakers and central bankers. The Federal Reserve claims to fight inflation, yet it created the very problem with years of near-zero interest rates and trillions in stimulus. And now, with CPI inflation numbers still sticky and consumer sentiment in freefall, they've cornered themselves into a lose-lose situation. Raise rates and tank the economy, or ease and ignite another inflation wave. Either way, fiat suffers. But physical gold and silver, finite, real, and time-tested, thrive. In the last few weeks, silver has quietly outperformed many other assets, pushing past key resistance levels while being largely ignored by the mainstream media. Gold, too, is testing all-time highs amid global central bank accumulation. Why are nations like China, Russia, and even Poland buying tons of gold while telling their citizens to hold cash? Because they know what's coming. They know the dollar is losing its dominance and that the next financial system won't be built on paper IOUs. It will be anchored to something real. Trump's return to the headlines isn't just about politics. It's about economic sentiment. His recent statements slamming the Federal Reserve and calling for a return to sound money are echoing louder than ever. Trump understands that Americans are losing faith in the institutions that manage their money. Confidence in the Fed is near all-time lows. The Treasury is issuing debt at a breakneck pace. Social Security is on track to go bankrupt. Meanwhile, the stock market continues to float on speculation, artificially supported by Fed jawboning and tech hype. But beneath the surface, cracks are forming, young investors are waking up. They're beginning to see the trap. Save in dollars, and you're guaranteed to lose purchasing power. Trust in stocks and crypto, and you're subject to manipulation and regulatory whims. The only assets with a 5,000-year track record of preserving wealth through every war, recession, and regime change are gold and silver. And right now, silver is arguably the most undervalued strategic asset on Earth. Not only is it a monetary metal, but it's also essential in solar panels, electric vehicles, and industrial applications. The supply is shrinking while demand is surging. This is not a speculative narrative. It's a supply chain reality. Meanwhile, America is sleepwalking into another debt crisis. With over $34 trillion in national debt and interest payments now rivaling military spending, the writing is on the wall. The government has no plan to pay it off. The only tool they have left is inflation. Silent theft through currency debasement. If you're holding dollars, you're the victim. Every printed dollar makes your savings weaker. Every stimulus check, every bailout, every new government program funded by the printing press, it's a transfer of your wealth to the state. Look at the banks. Regional banking stress has returned, and big names are warning of a new wave of collapses. If even one major institution falls, a domino effect could ensue. And with FDIC reserves under pressure and trust in banks declining, people are beginning to ask serious questions. What happens to my savings if the system locks up? If you can't hold it, you don't own it, and that's why physical metals are making a comeback. Gold and silver require no counterparty. They cannot be hacked, frozen, or inflated away. They don't rely on government promises or Wall Street gymnastics. In times of war, regime change, or collapse, like the world is inching toward now, they are the final fallback. Just this week, Trump warned that America is closer than ever to losing the dollar as the world reserve currency. That's not alarmism, it's fact. The BRICS nations are actively developing a gold-backed trading currency, and the world is watching. The petrodollar era is ending, and with it, the dollar's dominance. Gold and silver will outlive fiat. They have outlived every empire that thought it could print its way to prosperity, and they will outlive this one too. While Wall Street distracts you with AI stocks and debt-fueled bubbles, the smart money is quietly accumulating hard assets. If the monetary system resets, and history shows it always does, those holding metals will have purchasing power while everyone else scrambles for crumbs.